The enduring mystery of this magical thing we hear of called market correction, some reality on the euro, and the possibility of an American institution being severely affected by those greedy government taxes. All part of the Monday edition of Bulls and Bears. Welcome back to MidPoint. The Newsmax Director of Financial Newsletters and our own money master, Jeff Yastine, joins us. Jeff, let's go ahead and get started with some oil, if you will, because here's a report out of Goldman Sachs saying the slump in oil could upend $2 trillion in investments. My God, what kind of investments are we talking about here?
Well, essentially, you're talking about investments where the supposedly smart people in the oil industry, and I say that only laughingly,
facetiously,
really,
in a tremendous tongue-in-cheek. I got that one, yeah.
We all make mistakes here, but essentially, they struck a lot of deals where oil was $90, $100, $105, $110 a barrel, and with oil now closer to 40 than it is 100, those deals don't really make much sense anymore. So at this point, what Goldman Sachs and others in the industry are saying is that a lot of those deals either aren't going to get done, or if the deal is already commenced, then they'll basically scale back on the spending for it. And it means, things like Arctic drilling, which, we heard about with the Russians a few years back. A lot of that's probably not going to happen anytime very soon. Same thing in other areas where it's just expensive to get the oil out of the ground.
And we're talking here, from what I understand, $930 billion of shale development investments. Shale supposedly saving us, of course, a lot of the fracking that's in there right now. It's getting us to lower gas prices, but it still comes back to bite people, doesn't it, sooner or later?
It does. I mean, Goldman Sachs and others, we can all say, hey, we've extensively studied this stuff and we've done all the spreadsheet data and all that. But basically, there's just too much oil out there and there's not enough consumption. At some point, if the emerging market economies start to rev higher, or conversely, if we start seeing the dollar starting to lose value, oil is priced in dollars. So a dollar, when oil falls in dollars, a dollar buys more of a barrel of oil. So if oil starts, if the strength of the dollar starts to decline, then we would see oil prices start to move up. And again, that may also get emerging market economies going and spark more consumption on their end. But right now, it's just not there.
All right, moving on. People always said the U.S. would be back in the driver's seat of the global economy eventually. 15 years of watching China, emerging markets. Reports are now that we are now back at the helm of the global economy, and the euro could be worth less than the U.S. dollar by January of 2018. Put those both together, I would guess that's pretty good news for the Americans.
It is, and this kind of goes back to what I was mentioning a moment ago about the dollar. This is really a story about the strength of the dollar. As the dollar has increased in strength, it means that the U.S. economy itself has benefited greatly in terms of cheaper oil prices and all the rest. Conversely, in the rest of the emerging market world, like China, again, their markets are highly depressed right now, and a lot of that has to do with, again, the fact that the U.S. dollar is so strong and their own currencies are weak. So, you have to kind of just take these things in stride to a degree. Money, sloshes from where it's expensive to where it's cheap. That would be the big contrarian play, to say that somehow the dollar might decline this year. There's actually a few people on Wall Street who are beginning to suggest that. But as you said, you take the good news for where it is, and the U.S. economy posting its best gain, the expectation is that in 2015, the economy will post about 3.2% growth, which will be its best since, I think, 2005 or so. So that's not bad. You really can't complain about that.
45 seconds left. A beer tax. Bipartisan group of lawmakers introducing a measure last week overhauling federal taxes on beer. My God, Jeff, please don't tell me this is going to hurt the craft beer industry. I don't know what we'll do next.
This is the craft beer industry versus the biggies like Budweiser and Miller. So the craft beer industry has something called the Brew Act. That's an acronym that basically will benefit them as groups that produce less than 2 million barrels of beer a year. And the biggies have their own proposed legislation. It's called, again, the acronym is the Beer Act, and that would benefit all of them across the board, but because the larger ones produce more volume of beer, they would get the bigger savings. So again, like everything else, it's a battle of lobbyists in Washington.
Damn those lobbyists, man. Don't touch our craft beer. Don't they know how this could destroy the entire population right here at that.
I'm telling you,
right here at the network.
forget grease and forget oil. It's all about beer right here.
Let's also tell you it's all about checking out what happens on the website, if you will. Go to Newsmax.com, click on Money News. I'll give it to you 24/7 right there, and we'll tell you how the craft beer industry is not in any danger whatsoever. Jeff Yastine, thanks so much for your time, my friend. We will talk to you again tomorrow, and MidPoint will continue.